doing, Kirsten?
Good, how are you?
I'm doing well. Are you enjoying the weather?
Oh my gosh, fall's come.
It's here.
Yes, I'm not a pumpkin spice, but oh, I love fall, yes.
I know.
The weather.
Is what I like is chilly when it's cold out.
Yes.
So let's introduce Theron.
This is Theron Wall with,
Wallick and Volk Mortgage.
and we are so glad you could be here today.
Thank you.
Now, we asked you to come here today because there's a program that I think is beneficial for everybody to know about.
Yes,
And home,
it is the Home Plus program. It's a bond program, down payment assistance. There are a couple of different programs throughout the state. This is specific to Northern Arizona.
okay.
Oh, nice.
So what does that mean?
So what it means is there are funds set aside at the state level to help. It's primarily targeted to first-time home buyers, but you actually don't technically have to be a first-time home buyer.
Okay.
It does need to be a primary residence. And as you know, we have down payment requirements for the various loan programs, the only exceptions being VA and USDA. So this pairs up with either the FHA program or a conventional loan program to cover either a portion or all of the down payment, and depending on the amount of the down payment, assistance can even help a little bit with the fee costs.
So, first-time home buyer, what does that really mean?
Yeah.
Good question.
Do I
yeah.
qualify?
You might. So technically, actually, I know you don't. But but a first-time home buyer in the lending definition means you have not owned a home for the last 3 years.
I don't.
Yeah.
So they cannot be the owner of a home.
Correct. They can't
Okay.
and but to be honest with you, most of the programs will work whether you're a first-time home buyer or not. It's not that big of a thing. We do have all these programs are targeted for first-time home buyers, but there's very few things where they're anywhere in lending where you're restricted and cannot use it if you're not a first-time home buyer.
Oh, okay.
There's a couple scenarios, but very few.
So, okay, let's say, because our market here has been doing really, really well and our prices have increased. So let's say they look at a $300,000 house or $350. Are you going to give them like $35,000?
No. So
Sorry.
the amount of the down payment assistance, it's on a sliding scale that is tied to the rate. So it depends how much you need of the down payment assistance. And it can be up to 5% of the purchase price.
Wow.
Wow.
And there are actually some scenarios where if you're a veteran, you can get an extra 1%.
Wow.
And the loan programs that we pair it with, FHA, the down payment is 3.5% of the purchase price. So if you were to get the 5% down payment assistance, it covers all of that down payment plus leaves 1.5% left over to help with the closing costs.
Oh, wow.
So it does. You still are going to need some cash because that won't cover all of your closing costs, but it still helps with that. And most of the time, if somebody's got roughly $5,000 to work with, either from their own funds or a gift from a relative, or this is a hard market to negotiate closing costs from a seller,
Right.
but theoretically, that they could come from a seller. So that's not a whole lot of financial investment to buy a home.
So is it on specific properties? I mean, can they do a single wide in Paulden?
They cannot do a single wide, but we can do a manufactured home. We can do a double wide. Our traditional rules for the most part apply when it comes to manufactured homes. It cannot have been moved. It has to be the original installation.
Right.
It needs to be June of 1976 or newer, because the building codes changed around that time. If we're pairing it with FHA, we need to make sure we have the tie downs and the engineer cert on the property so that it not only that it's affixed, but also has the engineer's certification. But
it has to be affixed to a certain standard.
Yes, exactly. It has to do with how it's anchored to the property. The FHA program requires that, and as does, it's a good idea anyway with a manufactured home, and if the home doesn't have that, a lot of times we can work that out during the transaction to get it retrofitted.
Well, and I've lived here a long time, you guys have too, but it's basically affordable housing is not really affordable. And this seems like this might be an option to actually purchase a house.
It helps with that cash piece. There is a trade-off with it. And the trade-off comes in the rate pricing. So, and that's why I say the amount of down payment assistance you get, it works on a sliding scale. So you can actually do that program with just, say you just need a little bit of money. You can get 1%. You're gonna end up of the 5% that's available, you're gonna have a better rate. Your rate's gonna be a lot closer to where it would be anyway for a regular FHA or conventional loan. But the more, if you need that full 5%, which most people do, honestly, they have to anticipate that the rate's gonna be higher than it would be if they had the down payment. It's the trade-off that they have to do.
And that difference, how big of a difference is that?
It generally, the 5% tends to be about, the 5% down payment assistance tends to translate to about a 0.5% increase in the rate.
So, but rates are low, right?
They are
low.
Yeah. And these rates are set by the state of Arizona, so they do change a little bit day to day, but we're all working with the exact same resource when it comes to knowing what the rates are. They don't vary lender to lender like they do with our other programs.
Okay, so I have a question. So if I have a client who might need some assistance because of whatever, do they just call you and give them the money?
No.
You write them a check?
So,
kind of like a loan shark, you just give me the money?
They have to qualify just like they would for the other program. There are just some additional overlays for that we have to make sure they also meet that. So it has, for example, a 660 credit score requirement. The other programs we can go down to a 620 or sometimes even a little lower.
Wow.
It gets very costly to do that, but so there are certain things where there's limitations. Basically, my approach and what I tell people is that is going to be one of the primary programs we look at, but there are multiple programs that are available to help first-time home buyers or low down payment scenarios. We're going to look at all of them when we do that application, and then we'll pick and choose the best 2 or 3 to focus on.
And that kind of reminds me of what we were talking about a couple of days ago about using local professionals.
Yes.
Local escrow companies, local real estate agents, but now it seems like it's really important to use local lenders. Because what about these national portals? Do they know how to do that?
A lot of them aren't aware of the program. Some of them, say you're using an online, like they may technically be signed up for the program, but there are quite a few things that if you don't know the quirks, the ins and outs of this program, it would be very easy to overpromise to somebody and say they could use it and they're going to get that money, and then find out in the underwriting process a week before closing that no, that won't work. And I've heard those stories in those scenarios of people coming back and saying they told me I could get that program, but then I couldn't, and I had to come up with a bunch of money at the last minute.
Well, and because when I call a national lender that's not local, and it's never the same person you talk to. Right,
No,
it's
always
like an
different.
assembly line,
Yeah.
right? Yeah, so I'm like, well, who am I going to talk to today to get my update?
It's a very different business model for sure, and it is an assembly line. And honestly, if you're in a big city where all the homes are very similar, you're doing a refinance, you don't have timelines, you don't have all these moving parts and different parties to keep on the same page. That assembly line most of the time works fine. But when you start putting in all the special things that come into play in a local market like ours, that's where they just aren't equipped for it.
Well, and I always like to send my clients when they're having a heartburn with their lender.
Yeah.
I'm like, here, let's go to their office and let's sit there and talk to them. And it's hard to do it when their office isn't here.
That's true, and there's always a benefit to having a second opinion. So a lot of people may start in that environment, and there's nothing wrong with that. That you know to have, but then to also have a local lender that you've at least established a relationship with. I mean, we're all getting our money from the same resource.
Right.
It's all tied to the bond market on Wall Street. So there's not going to be dramatic differences. There can be some differences day to day in rate pricing and stuff, but not dramatic enough to say, hey, let's not even consider another option.
Right, and we always talk about shopping rates with different lenders, but we also like to use people we know and trust.
Yep.
Because it's a relationship.
Yeah, I have a question. So on this Home Plus program, years ago they had to take a class. Do they still have to take a class?
Yes, they're still going to have to do a class for this. Yeah, but they can do it online, and it's just takes a handful of hours to get through it. They've got that whole period of time during the transaction to do it. So it's one of the things on the checklist. And these days our transactions are 30 to 45 days usually, so there's plenty of time to get that in.
So does it show up as a second deed of trust on their property? Or?
Yes.
And they have to pay that back?
That's a great question. So this is actually a really important detail. So it is actually a silent second lien against the home that at the end of 3 years is fully forgiven.
Really?
So
Kind of like USDA.
Exactly. Well, yeah, the USDA, we did pair it up at one time with USDA. We're not doing that right now, but yeah, you've got this second lien there. So, and then every month, 1/36, because 36 months in that 3-year window is forgiven. So if you've gone 2 years in and you decide to sell the home, you're still going to have a portion of that left to be paid back, but it's money that you got for free anyway.
Right.
So it's, you're not paying any interest on it. It's just basically kind of a preventative from somebody getting in to the home using this state resource and then 6 months later flipping the property and not in taking that money essentially as profit. So, but it's, as long as you're in the home, it's forgiven and you don't have to worry about it at 3 years.
That's good to know. I forgot my next question.
Well, on a Home Plus, it can work on just about any real property, except for single wide,
Yes.
newer than 76. Any area it doesn't work for?
No, not really. We do have a little bit more. There are reasons we might not use that program and use something else. I mentioned the credit.
Sure.
There are a little bit more restrictive debt to income maximums that are allowed. There's just a lot of little details that are really honestly my problem to deal with.
That's right.
Not your guys or the clients even. We just need to qualify them. And the goal is to just evaluate all the options and figure out which one is going to be the best, most cost-effective way to get a home.
So as a real estate agent, I got a client, and you tell me that they can use this program. Now we're gonna write it up. Can we call you to get the numbers?
Yes, so when we're issuing that pre-qualification, there's a box on there, as you know, that says we're using down payment assistance. And then I always mention that in the comments as well. It really doesn't, on the listing side, if you're receiving a pre-qualification, there really aren't many things to be worried about. It operates pretty much just like it would with FHA or conventional, because those are the underlying programs that are doing the majority of the financing. But it is something to kind of be aware of, that they're utilizing that program.
Okay, I remembered now.
Okay.
Years and years ago, and you've been doing this a long time, is we had programs out there that if the government shut down, the money stopped. Is this fall under one of those?
This does not, because it's state money. So, and we don't have an issue. This is coming from Arizona AZD, the Housing Finance Authority. I almost forgot for a second.
Sorry, spreading.
And they actually built the program originally with funds from the settlement after the housing crash. There was this big settlement with Wells Fargo and all these large institutions. And they took that money and they said, okay, how do we reinvest this back into housing to help housing? And they created the program out of that. Now that money has all been used up. And that's why at the time, when they started the program, those rates, the rates were actually really, really good. They like to mention, now you're going to take a little higher rate is your
Sure.
trade-off. Originally, the rates were right in there in line with everything else because they were funding it that way. But they liked the program and how it functions, how it operates really well. So even when with that money used up, they basically just shifted it a little bit to allow us to still be able to use this program. And it's funded through the bond program. So as long as it's there, there's not, and we have not heard of any,
Okay, because you know what I'm talking about. We would get to close
Oh,
it
yeah.
and all of a sudden it'd be like, the money's not there.
Money's
So
not gone.
you have to ask Congress, wait, they're gonna vote. You're like,
Yeah,
oh,
they
okay.
set that, they would set a certain block up of money aside, and then once the money was gone, and we're like,
Yeah.
get it in, hopefully we reserve it in time. But now this program has been structured in a way that it's not really pulling the money. The money is actually kind of coming back around.
It's paying for itself.
Yeah, exactly. The servicer who you're making your payments to at the end, because they're getting that higher rate, they now have the money to turn around and refund the program.
Right.
So that's basically why it won't run out of money.
Excellent. Now, how does somebody get a hold of you to talk about this?
Well, there's a couple ways to do that. My direct number is 928-533-7473. You can email me at theron.wall@wvmb for Wallick, Volk, Mortgage Banker.com, or my website, theronwall.com. I'm on Instagram. You can find me. I'm pretty easy to find.
Excellent. Well, hey, thanks for being on the show.
Thank you so much for having me.
Thank you.
All right, and thanks for tuning in. Please like and share, and have a great day.